Hello everyone. In this video, I will tell you about PAMM accounts. What are PAMM accounts, and how to understand them? The name of the PAMM comes from the English abbreviation Percentage Allocation Management Module. How does a PAMM account work? A trader opens a PAMM account and starts trading on Forex, showing a confident and stable profit. The broker provides a rating of managers in which data on profitability, losses, and capital are displayed. The trader sets an offer for investors, which specifies the minimum contribution to his account, the minimum investment period, for example, a week, as well as percent of the commission from the profit, for example, 40% of the profit from the investor's money, the trader will keep for himself, giving the investor 60% of the profit. The investor looks at the broker's rating and finds a profitable PAMM account that brings 4.6% profit every month. He registers with the broker, replenishes his personal account and transfers money to the selected manager's account. For example, the investor's contribution was $1,000 and the managing trader brought 10% profit for the month. This is where the work of the PAMM account as a profit distribution begins. 10% of $1,000 is $100, of which $40 will go to the trader as a commission, 40%, and the investor will have $60. In total, the investor received 6% of net profit for the month. The highlight is that an unlimited number of investors can invest in one manager, and the profit will be divided in proportion to their contribution. A trader with a large number of investors will receive 40% of the total profit of all investors, being in a very favorable position. This motivates him to bring more and more stable and better indicators. If there are 50 investors and each will invest $1,000 and receive 60, under the conditions of the example above, then one trader will receive 40 from each investor, which will be $2,000. Nevertheless, this is his merit, and in order to gather a large number of investors, a trader must not just be a professional, but consistently make a profit. This is exactly what the investor needs and benefits from. PAMM accounts appeared in 2008 and were patented by the broker Alpari. Later, they began to appear at other brokers, some of which turned out to be scammers and left along with the money of investors and traders. The leader in the number and quality of PAMM accounts remains Alpari, where there are accounts with a capitalization of more than $2 million. When investing, it is necessary to use the rules of diversification, that is, you need to invest simultaneously in several PAMM accounts to reduce risks. The main participants are managing traders and investors. The former trade on the market, and the latter place their funds to earn from trading the former. The system is very simple and, at the same time, extremely effective. What is the interest of the managing trader? Why does he need investors at all? Because he can earn money on the markets himself. The fact is that not every trader, no matter how good a specialist he is, has a huge capital for trading. That is why many people open PAMM accounts, in order to get more funds for trading. In addition, the managing trader usually receives a part of the profit percentage from successful transactions and earns even more. Investors' risks. The investor bears 100% of the risk from his investments. In other words, the manager does not limit the risks of investors. But investors have learned to reduce all risks to zero by creating portfolios. Investing in 10, 15 or more PAMM accounts at the same time. No trader can constantly trade in the plus, so if someone brings a loss for the current month, the rest of the PAMM accounts from the portfolio will cover it with their plus. If the manager has made a loss to the investor, say 7%, then until he withdraws his capital to plus, the manager's commission will not be withdrawn. The manager's commission comes only from the investor's profit. With only $150, you can already become a portfolio investor and make a profit without doing anything. How to choose a PAMM account to earn more? Investing in PAMM accounts implies certain work at the choice of the manager or managers. How to choose the right PAMM account? First of all, there are several important criteria that you should pay attention to. To choose a PAMM account for investment, you need to start studying the information from the manager's ratings, where all the traders' accounts are presented in the form of a table that gives the main important indicators of each manager. The first thing that many potential investors pay attention to is the profitability that this or that manager shows. And indeed, this parameter allows you to approximately imagine what your profit may be at the end of a certain period. Often, in this column, you can see returns of 200, 300%. Naturally, a novice investor at the sight of such figures has a great desire to choose this PAMM account and invest as much money as possible. But this may be a mistake. To achieve a huge return, traders have to risk literally 100%, and the first mistake may be the last. I myself really like managers with such profitability, and I found one interesting strategy for myself. I sort the rating by new PAMM accounts and look for those that give out more than 40% of profit in a week. I invest simultaneously in 5, 10 such accounts for 1 week. Yes, of course, some merge, but the rest are able to cover the loss with their ups to 250% of the profit. The only thing is that I didn't want to work with large sums like this. Here you can recommend contacting traders who demonstrate profitability in the region of 150, 200% per annum. As a result, with the distribution of capital 50, with 50% participation of the trader, the investor's profit can be around 100% per annum. This is a very good result. Manager's experience. Before choosing a PAMM account, check one more important point: the experience of a trader. After all, investments carry certain risks. At the same time, working with many managers can carry increased risks for the investor. Here it is necessary to pay attention to several important parameters. First of all, we are talking about the age of the PAMM account. Professional investors often pay attention to managers who have worked for at least a year. And this is quite logical. Everyone always looks at the experience of a person's work. If it is missing, this is a big minus. Capitalization. A very important parameter is the manager's capital. The larger it is, the better. It means that the trader works with his money and takes risks on a par with investors. Another important indicator is the capitalization of the entire PAMM account. Here we are talking about the amount of deposits of all investors. The larger the amount, the better, since this indicates not only that investors trust the manager, but also that the manager has something to appreciate. After all, a good income motivates you to work professionally with minimal risks and maximum profit. The drawdown level. The level of relative drawdown determines the maximum amount that the manager can lose at a certain point in time. Naturally, this parameter is calculated in accordance with the total amount that is on the account. If this parameter is 40%, it means that at some point the trader has already lost 40% of his account. On the other hand, it is possible that this percentage was not a loss, but is the size of the maximum drawdown that was once on the account. At the same time, the transaction closed in the black. The higher the drawdown percentage, the more risk such an account poses. Each manager has a level of relative drawdown. The fact is that trading on the financial markets is impossible without a drawdown. Even if the trader correctly identified everything and closed the transaction with a profit, the price could repeatedly enter the negative zone during the trading process. In practice, a level of 50, 60% is normal. Of course, 30, 40% is already good, and 15, 20% is excellent. What is an offer? There is such a thing as an offer in investing in PAMM accounts. It is done by each manager in order for investors to join him. The offer contains several main points that you should pay attention to. Trading period. This indicator reflects the time after which an investor can take profit in his capital investments, the rollover time. A trader may have a special trading strategy, and it is not convenient for him if the money from the trading account will constantly wander. The trading period can be equal to 2 weeks, therefore, the investor can withdraw his money in 2 weeks. But at the Alpari broker, for example, the rollover is set by default for every hour. Most managers at this broker do not change this parameter, and you can invest money and withdraw it in an hour. The amount of remuneration. This is a percentage of the profit that the manager will receive. Let's assume that the offer specifies 30% interest. This means that in case of a successful trade, the investor can count on 70% of the profit, and the manager will keep 30% for himself. Often in offers you can find a floating percentage, which varies depending on the amount of the investor's contribution. The larger the contribution, the smaller the percent the manager takes for himself. Drawing up a portfolio of managers. Successful investments in PAMM accounts are not only the ability to find a competent manager, Often, those who are able to diversify their risks and correctly distribute capital between several PAMM accounts receive a larger and more stable profit. Of course, we are talking about compiling your portfolio. Situation 1. Imagine that you invested all your money in one manager and at some point he made a loss of 30%. You lost this money together with him. Situation 2. You invested in 7 PAMM accounts and 2 of them gave a loss of 10% and 15%, and the other 5 gave a profit of plus 30%, plus 7%, plus 19%, plus 14%, plus 2%. It is obvious that with portfolio investment, your risks are reduced many times, and in the second situation, despite the loss of 2 PAMM accounts, you will remain in profit.